History was made on Thursday, the 26th of June 2025, when President Bola Ahmed Tinubu assented to the four tax reform bills transmitted to the executive by the National Assembly. This was the culmination of the almost 2 years' work done by the Presidential Committee on Fiscal Policy and Tax Reforms empaneled in July 2023. We have with us a prominent member of the Presidential Committee on Fiscal Policy and Tax Reform, Managing Consultant Krestin Pedabo, Mr. Albert Folorunsho. Before we bring Mr. Folorunsho, let us share with you a few highlights of what is to come. Yes, what is to come, because the acts take effect from 1st January 2026. The Federal Inland Revenue Service will now be known as the Nigerian Revenue Service. The Joint Tax Board will now be known as the Joint Revenue Board. Value-added tax remains at 7.5%. In place of AMYMAT taxes like education tax, NIDA levy, NASENI levy, police trust fund, we will now have a single development levy of 4%, which will be shared among the various bodies. In addition to the currently existing tax appeal tribunal, there is now a provision for tax ombudsman, tax ombuds for short, where tax disputes can be resolved on a round table. And then the big one. It is generally agreed that all taxes ultimately come out of people's pockets, whether companies' income tax, personal income tax, education tax, value-added tax. But of all of them, personal income tax is the one that most directly affects the individual. Under the relevant act, low-income earners will pay either nothing or little, while, of course, the big boys and girls will chip in a little more. We have good news for you. Already as we speak, there is a tax calculator on the website of the Withholding Committee. Go there, type in your income, and you will be amazed. And that applies to everyone, everywhere, because, as you know, the Personal Income Tax Act is a federal law. So, Sokoto, Lagos, Ebonyi, PLC, Limited Liability Company, same everywhere. Now to our guests. Today, we have with us Mr. Albert Folorunsho, Managing Consultant, Krestin Pedabo. He'll be walking us through these four acts. Mr. Folorunsho, thank you for joining us.
Thank you, Amaka. Good to be with you.
Good to have you, sir.
Thank you.
So let us begin by congratulating your committee. I mean, you were a prominent member of the Presidential Committee on Fiscal Policy and Tax Reforms. So let us congratulate you on this great achievement.
Well, thank you so much. I believe it's a very great feat to see it to the end.
Yes, sir. Now, would you agree that it is a new dawn for tax administration in Nigeria?
Definitely. If you look at the way the bill has been turned into law, signed by the president in 4 buckets, that is the Nigerian Tax Act, the one that covers all the taxing rights, and then we have the Nigerian Tax Admin, which governs the administration of taxes, what authority, how do you file your returns, and then we have the Nigerian Revenue Service Establishment Act, okay, specifically for the authority that is responsible for collecting revenue due to the federal government, which used to be the Federal Revenue Service. And of course, we have the Joint Revenue Establishment Act, that covers all the authorities that have to do with revenue collection in Nigeria, starting from the Nigerian Revenue Service, the state, the local government revenue committee, and having to come together under the joint revenue body. And of course, it also covers the adjudication procedures, that is, the tax appeal tribunal, the tax ombuds, and how they operate. You will see that the Nigerian tax space is not going to be the same again, definitely, going forward.
Of course. Now, could you please walk us through the highlights of this 4 tax acts? I know you've actually mentioned part of it, but we want more.
Okay. So, if you look at the Nigerian Tax Act, it is the one that covers all the taxing obligations, all the taxes that are payable, and the basis for computation of all taxes that used to be separate acts. We used to have the personal income tax, the company income tax, the petroleum profit tax. All of those has been subsumed into the Nigerian Tax Act. Okay, so starting with individuals, what taxes are payable by individuals? Income tax, capital gains tax, value-added tax, and other taxes. You will see it there. Then, of course, if you pick a company, what are the taxes payable by company, depending on what the company is into. Either it's into oil, or it's into normal trading, into business. All of those are also contained in the Nigerian Tax Act. So the provision of the Nigerian Tax Act covers all taxes. It's more or less the fiscal provision that determines the tax payable by an entity, by an individual, or whatever type of organization that you may be. Then we have the following that is the Nigerian Tax Admin Act, okay, that determines, what returns are due and by who and to whom. Okay, so which means for a company, you file your tax with the Nigerian Revenue Service, depending on the type of return you are filing. That is, if you are filing return for your corporate tax, you file with the Nigerian Revenue Service. If you are filing return for your compliance with obligation to deduct tax from employees, you file with the relevant state tax authority. If you are filing returns for VAT, you file with the Nigerian Revenue Service, because they are still the relevant authority obligated to collect the value-added tax. Then again, we have the Stamp Duties Act, which authority, depending on whether it's an individual that is paying the tax or a company. For a company, you file with the Nigerian Revenue Service. For individuals, you file with the State Internal Revenue Service. So the Nigerian Revenue Tax Admin Act covers the relevant authorities, the type of return you file, the timing of filing of the return, the timing of payment, the procedure you have if you have objection to any tax authority. And of course, it also covers the establishment of the state and local government revenue committee, which means it is the basis on which each individual state now can establish their own state internal revenue service. They can expand on what is in the Act, but of course, under the concurrent list of the Constitution, it gives the National Assembly the right to make law on the establishment of state authorities, and that has been included in the Nigerian Tax Admin Act. The third one is the Nigerian Revenue Service Establishment Act, which I said relates to the authority that is responsible for collection of all revenues that are due to the federal government. Of course, when I say all revenue, it does not mean that it has now subsumed the other revenue collecting agencies. But of course, if you look at number 2, under the functions of the Nigerian Revenue Service, says they must account. Okay, accounting means they have the right to request for those information from all the agencies and present what revenue has been collected by the federal government in a particular period. Not that they have been obligated to take over the function of custom or NIMASA, as I've heard in some places. No, but they have an oversight function. If you look at the second schedule, to the Nigerian Revenue Service Establishment Act, it also states what taxes they have administrative authority over, starting from the Nigerian Tax Act, from the other taxes that I have listed. Okay, so that is also very clear. And then the last one is more or less the one that covers all the revenue authorities and how, what rights the taxpayer has, okay, going through the tax admin. And of course, the coordination of all the taxes. And that's why we have the Nigerian Joint Revenue Establishment Act, okay, headed or coordinated by an executive secretary to the board. The board is headed by the executive chairman of the Nigerian Revenue Service. And of course, all the state chairmen are also members of the committee. So they advise government generally on tax matters. They also advise the government on double taxation issues where there are disputes as to, in terms of residence and where a person is due to pay tax. They also have the right to adjudicate or advise the authorities, at that level. And under that act, we also have the tax appeal tribunal, okay, which is where you go after you have exhausted all efforts to reconcile with the tax authority if there is any dispute. And of course, in between that, you can also go through the tax ombuds, which is just an administrative or a dispute resolution arm that has been incorporated into the act now. Instead of going straight to the tribunal, which is more like a court, you can engage with the tax ombud, which is there majorly for the taxpayer. They can engage the tax authority on your behalf. They can liaise with the tax authority. They can even investigate action that they have taken that the taxpayer has complained about. And of course, it is only where they are unable to resolve their issues that the taxpayer or the tax authority can proceed to the tribunal. But it's not compulsory. It's not like you must, but it's there and you can use them. So that is the tax Nigerian Joint Revenue Establishment Act. So those are the 4 bills. And so it is very clear now that depending on what issue you want to deal with, you go to the appropriate tax law and very straightforward you find them there. So it's a new dawn.
It's a new dawn, quite a lot, I must say. Okay, now we are interested in the development levy, which has been put at 4%. We believe this is a game changer. Could you please tell us more about it? So
the development levy, presently, as it is now, covers what we used to have as the education tax, the Naseni Act, the Information Technology Development Act, and the Nigeria Police Fund, which was almost gone, but is now back, okay? And all of that is now covered by the development levy, which is calculated at 4% of accessible profits of companies, 4%. And there is no exemption, okay, except for small companies and non-residents. So the issue of threshold that used to apply to NITDF is not applicable in this case. It is just 4% of your accessible profit. And that fund is distributed amongst, the areas that used to have AMYMAT taxes. Is now distributed among them. One is the Tertiary Education Fund, 50%. The Nigerian Student Loan takes 15%. NITDF, the Nigerian Information Technology Development Fund, 8%. The National Act, 8%. And so on, including the cybersecurity, takes 5% of that. And most importantly, the defense and security infrastructure also take 10%. And that 10% is also further divided among the defense agencies, okay? From the provision that we have seen, the defense headquarters will take like 8%. The Nigerian Army will take 20% of that 10% of the development levy. And then, of course, the Air Force, 12.5%, the Navy, 12.5%, and so on until the amount is fully exhausted.
Oh, okay. That's interesting. Now, under the relevant act or acts, what is the picture of capital gains tax now as opposed to what it was before?
Okay, capital gains tax used to be a separate tax, okay, in terms of that is applicable to both companies and individuals at a specified rate of 10%. What has happened now is that we have the taxing acts have now been subsumed together under the Nigerian Tax Act. And so the capital gains tax still remain, but the calculation and the application is now a little bit streamlined. What do I mean? Capital gains tax now applies at a rate that is applicable to the taxpayer. So it is the taxpayer's tax rate that determines the rate at which the person pays the capital gains tax. If you are a company that is engaged in just any a Nigerian company, you pay capital gains tax at your corporate tax rate, which is still currently 30%. Okay? If you are an individual, it depends on your tax rate on the graduated tax table of rate. What is your effective tax rate? If your effective tax rate is 0%, which means your income is no more than, or your taxable income is no more than 800,000, because the first 800,000 is exempt, you pay tax at 0%. The next 2.2 million will be at, you pay your tax at 15%, all right? So that takes care of the first 3 million. The next 9 million is at 18%, okay? So if you take 9 million, you add to that, That gives you 12 million. The next 13 million, which will make it to be 25 in total. The next 13 million is at 20%. Okay? The next 25 million is at 23%. And anything above 50 million is at 25%. So it is possible that a taxpayer or an individual could pay as high as 25% rate on capital gain. So that is a major introduction as far as capital gains tax is concerned. For petroleum companies, that their rate is as high as 85%, there is a special provision for them that says that their rate should be the rate applicable to any company, because petroleum company is like any other company and they pay tax, even though at higher rate, but their capital gains tax remains at 30%, just like any other company.
We've partly answered the next question that has to do with the personal income tax, whereby low-income earners have cause to be happy under this PIT regime.
Okay.
Do you want to throw more light on it for our viewers?
Okay, so for personal income tax, that is when we say personal income tax, is tax payable by individual, either on their salary as an employee, or as a trader, an individual trader that is not a limited liability company. You also pay personal income tax, or an enterprise that you are using to run your business is not limited. You also pay personal income tax. A partner in a partnership, okay, is also treated as an individual, and you pay personal income tax. So the current provision is that for individual, the rate remains graduated rate. And I think I've mentioned them from 8% to 15% to 18% to 20%, 23%, and the highest rate is 25%, depending on your income bracket. All right? But of course, before the personal income will be subjected to tax, there are expenses that you may have incurred, which will be deducted, particularly if you're a trader or you are a partner in a partnership that is running a business. Expenses are deductible. If you are an employee, we also have deduction. Okay? The deduction that is available for employees is majorly rent relief. Rent relief in the sense that if you are a tenant and you report to the tax authority how much you pay as rent to your landlord, you get that relief of a maximum of 500. That is 20% of your total income, excluding the rental bit, or subject to a maximum of 500. And if you are that bracket where you enjoy that 500,000, your tax rate, depending on how much you earn, can reduce. If you are a low-income earner that you don't earn more than 4 million, or let's say 3.6, comparing the old law and the current provision, you definitely are paying much lower than the old provision. But if you get those 500,000 relief, in fact, the rate reduced up to someone that earns up to 20 million. Okay? As long as you are able to enjoy those relief, your tax rate reduced if you earn not more than 20 million. But as long as you earn above 20 million, okay, comparing the old law and the current law, definitely the tax is on the rise. But effective rate, presently, the highest effective rate is about 24.3%. And of course, the old provision was about 19 point, depending on your circumstance again, about 19.2%. Again, before taxing anyone, if you have contribution to pension, if you have contribution to NHF for your housing, if you have contribution to your health insurance, all of those are also deductible. Or even if you take a loan to construct to buy your own residential accommodation, the interest on that loan, if you make a claim for it, will be available as a deduction from your income before the difference is now placed on the graduated tax table of rate that we have discussed. So definitely, for low-income earners, the taxes will reduce based on this new tax law, okay? But for high-income earner, of course, Nigerian tax is progressive. In fact, the situation is that we want the high-income earners to pay the tax while the low-income earners enjoy. That is the way it is.
Of course, there's room for celebration for low-income earners. But now, should we say that the high-income earners will be unhappy with regards to this?
So tax is pay as you earn. Personal income tax is pay as you earn. If you earn high, you pay more tax. If you earn low, you pay even lower tax. Okay, it aligns with the principle of taxation, the progressive taxation. Okay, and so the only quarrel Nigerians have is the fact that you pay tax and you probably don't get the benefit of why you are paying the tax. Otherwise, I believe Nigerians like to pay tax to some extent, okay, compared to what people say. If you see, the major issue is what is the tax being used for? If I pay tax and my roads are not tarred, why should I be happy? I pay tax and I'm still having to provide myself with water. Why should I be happy? Those are the crux of the matter, not the tax rate per se. Effectively, Nigerian tax rate is still one of the lowest, okay, when it comes to personal income tax. It's still one of the lowest compared to several countries.
That's true. Now let's move on to value-added tax. What is the new landscape looking like?
Okay, so there has been a major change in the value-added tax space, particularly as to what you pay to the government. Okay, of course, value-added tax is, a consumption tax, that devolves in successive stages, such that at the end of the day, it is the final consumer that bears the burden of tax. Okay, so the way it works is that when you are selling, when you are selling, you charge VAT. But of course, before you charge VAT, you must have bought what you are selling, or you must have produced what you are selling. So what you pay in the course of buying what you are selling is called the input VAT. What you charge when you sell is called the output VAT. What is due to government is the difference between your outputs and your inputs. All right? So we used to have some inputs that were not deductible. So our tax was like a sales tax before. But now you are eligible to deduct all your input tax that you have paid. 1, on the goods, 2, on the expenses you incur, and 3, on the assets, if any, that you use in producing the goods. Okay? The last 2 are not allowed before, but now you are eligible to claim your full input VAT. Okay? So, which means there is full application or implementation of the proper VAT and all sales tax that we used to have. Okay, and so that is what has changed majorly, including the fact that in order to give reprieve to the common man, most of the essential goods that used to be treated as exempt are now have now been classified as zero rated. Exempt means you are not liable to pay VAT at all. In fact, you don't need to file a VAT return when you are selling those items. But when you are selling items that are classified as zero rated, it means you are eligible to claim whatever input VAT you have suffered in the course of buying them, which is a major plus, which is supposed to make those goods cheaper, okay, other than the ones that is exempt, that you have to bear the input VAT on those purchases. So those are major changes that have happened. The fact that you are able to claim your input VAT in full on both your fixed asset that you use for the production of the goods and services, on your overhead expenses, and on the raw material or the item that you have bought for resale. You are able to claim the full input VAT on it, which means there's going to be reduction in revenue as far as VAT is concerned, as long as that rate remains 7.5% as suggested by the authority.
That's a good one. Now, it has always been the wish of the business community that tax laws are such that can deepen the stock market, that is, encourage the buying and selling of shares. Now, we want to know what is in the new dispensation for the stock market.
Okay, the stock market is the market for the buy and selling of shares, like you said. The provision as far as the stock market is concerned is the fact that when you sell shares, you are into selling of shares, or maybe you invest in shares of companies and you dispose it. In order to ensure that capital remains in Nigeria, particularly for foreign portfolio investors in order to ensure that they reinvest. The rules are that where the proceed of sale is not more than 150 million, okay, and the profit on the disposal, okay, is no more than 10 million, then that disposal is exempt from tax, which means you are not liable to pay tax on that disposal of shares, okay? But where the proceed is above 150 million and the profit is more than 10 million and you did not reinvest, there will be tax on the gain you make on the sale of that share. So in order to encourage transaction in the capital market, that exemption is there, that if you dispose of shares and you reinvest in other shares of Nigerian companies within 12 months, within the 12-month period, then that transaction is exempt from tax. But if you also part reinvest, then only the proportion that you did not reinvest will be liable to tax, while the portion reinvested will be exempt. So that is the only benefit in terms of strict transaction in the capital market that we can say is in the law. It was there before and was retained. We used to have rollover relief on other assets. They were not retained. Only the ones on shares has been retained in order to encourage activity in the capital market, which is well taken. And I'm sure the capital market people are happy about that.
Of course, that's fair enough. We recall that on your last outing on tax matters, you came to talk about the withholding tax regulations, which took effect from the 1st of January 2025. We want to know if these provisions are still retained or if there are any changes.
Yes, there is nothing in the new act that prescribe or affect the regulation. Okay, so the regulation, the existing regulation on withholding tax subsists. Okay, the reduced rate for transaction in the ordinary course of business, the reduced rate on construction of construction transaction, the exemption for certain transactions, all of those are still in the law. You know, withholding tax is not a form of tax. It's just a method of collecting tax from certain income in order to ensure direct access to revenue by government, and of course to be able to track revenue or tax revenue that will have escaped the tax net. So all the provisions in the regulation, you know, still remains, and we expect that the implementation has started.
Oh, okay. All right. Now, we are aware that the implementation of these 4 acts will take effect on the 1st of January 2026. We are just being curious, why the 6 months gap? Why not immediate?
Okay, so what we used to have, or what is in the tax policy, is that 3 months notice is allowed for taxpayer to be able to study change in tax law before implementation. But you agree with me that these 4 bills or these 4 laws are so massive that requires taxpayers' understanding. Okay, the Nigerian Tax Act is about 214 pages. Okay, the tax admin is about 82 pages. The joint revenue is about 26 pages, or even 42 pages, while the smallest one, the Nigerian Revenue Service Establishment Act, is about 26 pages. To be able to study all those provisions, which I've not been able to go into now, is not something you do overnight. It is, you require time for even the tax authority to understand, for the taxpayer to have an idea of what they are. So granting 6 months before implementation is definitely welcome. It's something that is required. There are so many changes in the law. The calculation of capital allowance to some extent have changed. VAT, like I just told you, has changed. A lot of things have changed, and you need to get familiar with the new provisions relating to filing of return, fiscalization. We expect to come into effect. The tax authority need to be ready. They need to, deploy some equipment and technology that will help, in fiscalization that we talk about. They have started talking about the invoicing by the Nigerian Revenue Service. A whole lot of things. Education is required for both the taxpayers and the tax authority. So definitely It's not something that can be done within 3 months. So this 6 months is good enough. Even maybe it should be extended if you ask me, because guidelines still need to be issued for the implementation of so many provisions in the law. The minimum tax, the global minimum tax provision is in the law. We need guidelines from the Revenue Service. I understand the committee will also work in ensuring the proper implementation of these laws. Since they were involved in their formulation, they should be involved. And so there has to be that collaboration with the different tax authorities. Both state authorities too have to educate, look at their budget and educate their people on the new provision, particularly on personal income tax. State authorities are also getting used to having to forego some of the taxes they were pursuing, which this reform is hoping that they will drop. I mean, those nuisance taxes, okay, we expect that those ones will be dropped. And if you don't give them time to really understand this provision, it becomes a bit difficult. So, yes, the 6 months is required, and I think it's good that government has given those 6 months.
Of course, I agree with you. Now, finally, before we let you go, sir, I mean, unlike in the past with government committees, we are aware that the members of this Presidential Committee on Fiscal Policy and Tax Reform are not government employees. We want to know, how will the members go about it? I mean, how will it play out, since we are from different sectors coming together to see to the implementation of this act?
Okay, so like I said, it is the tax authority that implements the law. But what they implement is also their understanding. So for so many areas that remains very unclear, even to the tax authority, guidelines will be issued. So the committee members are going to be involved in issuing the guidelines. Nothing will be left to the tax authority, because if they are left to the tax authority, they will implement it in the way that suits them and convenient for them, even at the expense of the taxpayer. Okay, so it was very good that the president allowed the committee to work with the relevant authority of the federal and the state authority, including the local government committee. And of course, that is also how they will be able to let them understand the reason, the likely revenue they'll be generating from all of the provisions that have been included in the law, which will sway them from, implementing all the existing unstructured and nuisance taxes that we have all over the place. A lot of Nigerians are concerned about, all those monies they collect at the bus stop, at the market store, which are really not in the tax law, which are really not what the National Assembly can legislate upon. But it is only through this implementation process and collaboration that will make them to understand the impact of the law and the likely revenue that accrues to the state, because most of these nuisance taxes come from the state. So if we can see that the bulk of VAT is going to the state, the bulk of stamp duty or the whole of stamp duties, as far as constitution is concerned, goes to the state. And so many other taxes. Personal income tax is supposed to be the headline tax for revenue generation in Nigeria, particularly, and the bulk of all those personal income tax goes to the state. So if all the provisions that have been put in the reform are properly implemented, the state will generate enough revenue that will ensure or show them that there is no need pursuing taxes that are not even fruitful in the first place. Okay, so the implementation aspect is very key, and the committee will definitely work with the relevant state in issuing the guidelines and also educating the public on their rights and what the new law is talking about.
All right, sir. Thank you very much, sir. We know that there is more work. I mean, all hands need to be on deck for both the tax consultants, tax professionals, tax administrators, and even the taxpayers.
Definitely. I mean, this is just the beginning of the education. I've spoken to the provisions that are very pretty straightforward that we have seen. We're still waiting for the gazetted copy to see exactly what is in the provision of the law, and then we can be freer to speak more to the specific provision of the law.
Of course. So on that note, that we thank you, Mr. Albert Folorunsho, Managing Consultant, Krestin Pedabo. We really appreciate your time.
It is my pleasure.